All right, fam. Welcome to Electron FX once again, and we'll be going into a very serious topic, a topic that could change your trading journey. All right. One of the major challenges that a lot of traders have been having in the trading is access to huge capital. All right, to subsistence capital to pay their bills. Right. Now, let me tell you something. Now, uh, that is the essence of this class, and I want to bring it to you. So now let us bring an analogy, right? Let's assume that you have $100 in your account, right? You have this $100 in your account. So we have $100 in your account, and maybe you decide to risk 10% of that, right? So you're risking 10% of this $100 account, right? And you know that if you're using a risk reward of 1:3, you're expected to make $30 on a singular trade, right? So if you're risking $10 on this trade, right, you're risking $10 out of this trade. So out of $100, you're risking 5%, which is $10. So if you say 10%, which is 10%. So if you risk 10% to make 30, right? So your reward out of this trade, right? So your reward is $30, right? So you're making $30 off the trade if it eventually pans out, right? So you're making $30 from this trade, right? So this is it. So you risk 10% and you make what? $30, right? All right, to make 30%, sorry. Should have included that. Right, so to make 30%. Right. So if you risk 10% to make 30%, right, then your reward is $30. Now, assuming that instead of putting this $100 in your account, you use this $100 now to buy, right? So you made $30 on the trade, you use that $100, right? Imagine you used the $100, right? So you use that $100 to buy a $10,000 account, a $10,000 profit account, right? A 10K profit account, because it's an MFF is about $100, right? So it's to buy a $10 profit account, right? All right. So now you have access to a $10,000 profit account. Believe me that if you're risking, even if let's assume that out of this $10,000 account, you decide to risk just 1%, right? So now in this scenario, let us assume that's just the math now, right? So if you're risking 1% of a $10,000 account, so you should be able to 0.01 times 10. Okay. Let's say you're risking just 5%. Or let's say yes, 5% of it. Right? In this case, you are risking 10%. Let's assume you risk 5%. Right? If you risk 5%, right, that is about 5%, or let's say, so when you buy a $10,000 account, let me make it easier, like on the real scenario. So you have access to, right? So you now have access to a max drawdown, right? So you have access to a max drawdown of so you have access to a maximum drawdown of if it's MFF, you have access to max drawdown of $1,200, right? So that's what you're actually trading with. You're not trading with the $10,000 account. So you have used your $100 to have access to $1,200, right? So now if you risk let's say you risk 10% of that on a trade, right? So you risk 10% of the max drawdown, right? So you risk 10% of the max drawdown. You're not going to be risking 10% of the overall account. You're risking of the overall drawdown, right? So that's why you're risking that. So you're risking 120 now. You're risking 120, $120. And you win the trade. You're now making what? Your reward is $360, right? Your reward is $360, right? So 360. So now I will still explain it all over again. I will still come to like and understand what I'm trying to say. Now, if you had $100 in your account, and you are risking maybe 10% to make that's 1:3 risk reward ratio, right? So your reward for a one trade is $30, right? But now let's assume that you use this $100, right, to buy a profit account of $10,000, right? So now you have access to what a maximum order of one. So that means you have used your $100 to buy what this $1,200 equity, right? So now if you risk 10% of that, right? Now you're still risking 10%, right? Nothing is changing. But now you bought a profit account with your $100. So now if you risk that same trade, that particular trade you took on your $100 account and you made $30. Now if you're risking 10%, you're making what 360 on this same trade that you made $30, right? So this is what I'm trying to tell you. So with a profit account, you have access to what more profit and more wins. So now let's go straight to the point. Why should you trade profit accounts, right? So I'll be bringing up some points and then we look look at the profit in details, right? So these are the reasons why you should trade a profit account. So first reason is that, so I'll just list them out and then I will explain them one by one. So contribute, I've already written them out. So now, first reason is that you have what it is harder to blow account. So now remember our analogy that you start trading with us $100 account. Believe me that it is much easier to blow $100 account than it is to blow it a $1,200 account, right? So it's easier to blow an account of $100 than it is to blow an account of what $1,200. So with a $100 account, you actually have access. You have it's easier to blow your account because you also, maybe let's assume that the bills, right? Maybe your monthly bills, your is actually $200 or something of that sort, right? So now you have to find a way to turn your $100 to $200. And believe me, doing 100% in under that kind of pressure will not be so easy, right? So you don't have to make $30, make another one, so you get it up to 100, right? And then you can pay your bill. But if you're trading with a profit account, you have access to what one trade can pay your bills, right? You're using that same $100 for just one trade, you're making 360 of it, right? So that is why you should trade a profit account. The second one is have bigger rewards, like I've already explained. When you are trading with a profit account, you have access to bigger rewards, right? The same trade that should have given you $30 on a small account, it's not giving you as much as what? As much as $360 on your profit account, right? So you have a bigger rewards and better psychology, right? When you have you're trading your $100 account and it's a personal one, right? You will be so emotionally attached to it, right? So you'll be so emotionally attached because if you make a loss on it, you know you're losing your actual money, right? But if you're losing a profit account, you are not actually losing your personal cash, right? So I should have added that. So we'll add that to number 5, right? So number 5, the profit covered for losses, right? So profit covered losses. So the losses um, are on the profit account. So if you buy a profit account and then you lose, maybe you lose the $1,200, right? You're not going to be asked to pay for it, right? You're not going to be asked to, repay it. Unlike trading with your own money or someone else's money, right? So I advise you guys, if you're a trader looking for capital, I advise you to not bother trying to um, collect people money, right? Don't go for people money, go for profit account, because when you lose or make any loss, the profit covers it, right? And that's then due to the bigger equity, you find it more difficult to blow your account, right? So now equity and margin for better leverage, right? When you're trading with a $1,200 account, you are actually having more better leverage. For instance, the indices, right? You can't trade indices with a $100 account. Maybe you cannot use 0.02 or 0.03, right? You have to use the least cost side because the indices like the US 30, US 100 actually use bigger leverages, right? So you have to use a bigger account before you can actually use this, right? And now, um, the fifth one, which I've also explained, the profit they cover the losses, right? So if you make a loss, maybe you lose $100, right? Maybe you bought a $10,000 account, you have access to one two, right? If maybe you lost let's say $500 out of that, right? you're not losing your actual money, right? The only thing you invested in the profit is your $100 equity, right? So you invested $100 to get what? $1,200. So if you lose 500 out of it, it's not your personal money, right? Nobody's going to come and knock on your door. No police is going to come and say, come and repay all of that. So you avoid all those troubles that comes with trading people's money, right? So I'm encouraging you to not trade people money. Go for profit account. That is the best way to go. And I'm advising you, right, to go for that, right? So now the skill set requirements. The first requirement to trade profit account is you must have a good trading strategy, right? It has at least 3 wins out of 10 trades, right? And the reason for this, I've explained this in my risk management class, right? So go and watch the video of risk management. So if your strategy, if it's indicators, harmonic patterns, smart money, NCT, whatever you trade, right? IPDA and all of that. So if you can give you just 3 wins out of 10, you're good to go with a good risk management plan. So you must have a risk management plan that governs your entry and your exit, right? How much you're risking per trade, how much you're to make, and all of that. I'm not going to talk about that now. So go to the video I made on risk management. And if you want to get that, just simply go to my channel and just simply search risk management by Electronetics. You'll find it, right? Just type on Google or YouTube, whatever, risk management by Electronetics. You're going to find it, right? So let me just see if I can do that. So let me just see if I can do that on Google. All right, so risk management, just type it on Google. All right, so risk management Electronetics. So that should give us the results, right? So just search this on Google. You should find it on Google, right? So let's go to Google now and see if I can type that out, right? So, let's see if it's going to pop up. Okay, so just simply to do that risk management by Electronetics. I think it should pop up, right? Does it pop up? Okay, sorry. Let's add YouTube, right? Electronetics YouTube. We have to make it specific. This is going to plan. Doesn't plan, that's fine. All right, so it's here. You can find it. The video is here. So risk management by Electronetics. Fibonacci X risk management Electronetics. So just click here. You'll find the video and you can watch it. Right. So these are the things that I want to share with you. So you can go do your research and all that. So now let's talk about MFF review. What is MFF? MFF stands for my Forex Fund. So you can see their website here. This is my Forex Fund, right? So you can just come to the website. I will explain one or two things for you, and then you can go through it yourself, right? So let's look at my first one. That's MFF. It's a pro firm that has been around for 2 years and they have positive reviews. All right. So I will just show you a few things and then we move on. So this is their website. All right. So this is their website and let's see. So they have different kinds of accounts. They have the rapid account, the evaluation account, and the accelerated account. So you can see the explanations here. The rapid accounts, they have their rules, evaluation, and then accelerated, right? The evaluation, I think they will give you some challenges. You have 2 challenges and all of that. So they give up to 85% profit split. That means whatever profit you make 80%. So you go through any of this, whatever works for you, right? But I encourage that this is usually the best because it's the cheapest and it actually teaches you how to manage your risk, right? So let's look at the evaluation and see what it entails, right? So if you come to the evaluation, because I don't, if you want to go for rapid, you could go, but me, I prefer the evaluation model because you have more profits and more equity to advantage, right? So you have more head drawdown and all of that. So I prefer the evaluation phase, right? So let's go through the details and then we can know how to do it. So this is it. So these are the rules you must. Number one, it has a 5% drawdown rule, meaning that if your equity is $10,000, right, you cannot lose more than 5% in a day. And believe me, the 5% is not close to it, right? The 5% means running equity, meaning that if you maybe enter a trade at maybe Euro USD and maybe it retraces to minus 5% before going to profit, you have violated the trader, right? So it's not a closed trade, it is actually a running trade. Number two, your trading account must not go over 12%. That means if it's $1,000 account, you must not lose $1,200. If it's a 5,000 account, you can only lose $700 or you'll be disqualified, right? And if he has two phases, in phase one, you need to pass 8% without breach any of the rules, right? So you have 30 days to get 8%. That means if you're trading a $10,000 account, you just have to take it to 800, right? 800 in 10 days, in 30 days, right? So remember that they don't function on weekends, right? They don't function on weekends, all right? So you wouldn't find they don't function on weekends. So actually you have 30 minus 8, so you have 22 days to do this, right? So they don't function on weekends. So I advise if you're doing MFM, start on Mondays, right? So you can avoid weekends from reducing your days. Start on Mondays, right? So you can have 22 days to yourself. They don't do the weekends and all of that, right? So another one, after you pass the phase one, you don't have the phase two, which you have to take it to 5%, because I want to confirm that you know what you're doing. So it not be like a lucky stuff, Some people can be lucky and pass and they won't be able to pass this, right? So 5%, you have to take your account by 5% in what? In 60 days. So you have more time now. The phase one, you had 30 days, and this phase two now you're having 60 days. That's 2 months, right? And remember, you have to remove 8 days from each month. So you actually have 60 minus 30, you have 52 days to do the 5%, which is much easier, right? And the minimum for each phase is 5 trading days, right? So you must wait for 5 days in the total 30 days. This phase one, you have to wait for 5 days in this 30 days, and phase two, 5 days in the 60 days. So 10 days maximum to pass the challenge, right? So you must pass for 5 days in the first phase, and then um at least um 5 days in the 60 days, right? And then there's no restriction. So they don't limit there's also a consistency rule, like in some platforms, they don't have consistency rules, they don't have lot size limits, they don't have all those things, right? Anyhow you want, even for it's 100 lots, as far as you're not violating the rules that they give you, right? These are the only rules that they give you. 1%, 5%, and all of that, right? So don't bother about all that. So if you can do this too, you're good to go. So you don't have any restrictions, anything at all, right? So these are those all the rules. So they have different accounts. You can see them quite affordable. So you can see 5,000 accounts. You're paying $49 to have access to this. You can see now why you're paying 84 to have access to $10,000 account. You're paying 139 for 20K and all of that, right? So this is the rules. Remember, over than 5% is to 250, 600. So you can go through and select whatever that's you're fine with, all right? So if you want to join it, if you want to join it, just simply hit the link in the description. So I give you a link to actually have access to this. So if you want to check it out or buy a profile account, just hit the link in the description, right? So hit the link in the description, right? If you want to buy it or have access to it, right? So you hit the link in the description to buy an account or do your research. So you just hit the link in the description to buy an account or do your research, all right? So that is it. That is all for now. So just hit the link in the description to have access to it, right? So do have to join my YouTube community to get more details from me. Like, subscribe, join the Telegram channel. I'll see you in the next video. Until next time, please be safe.